Hello everyone, welcome to Smart Investing. So today's video is going to be about the banking services sector. I have three stocks for you. Really, I have two because I believe it's this one that got delisted. But we'll go over them and we'll see which ones are actually worthy and which are not. So let's begin. Today is June 19th already. Time is like flying by. I hope everybody had a good weekend. Markets are closed. It is 10:24, 10:25 a.m. Eastern Standard Time, Monday. And again, markets are closed because of a holiday. And for tomorrow, from Tuesday through Friday, markets will be open. So it's only for today that they're closed. So anyhow, moving on to the banking services sector. For today and today only, I will be uploading. I didn't upload any videos on Friday. Wife had me too busy, which is stupid. But whatever. I was disappointed I couldn't upload any videos. We had some stuff to do. So anyhow, I definitely have the day off today and this whole week. So I'm going to make up for what I should have done on Friday. I'm going to make it up for today because my wife has been holding me back. So if anything, you can blame my wife for holding me back on the videos that I didn't do Friday that I was supposed to do. So anyhow, I'm going to do a video every 2 hours for today. So there's going to be a total of 6 videos today. So you count every 2 hours up until I upload 6 videos. So we're looking at about, let's say I upload this video around before 11. So you're looking around 1 o'clock will be the next one. 3 o'clock, 5 o'clock, and then 7 o'clock. And then we're looking at about 9 o'clock. So 6 videos for you guys today. Really short videos, nothing crazy. So again, let's jump right into the first video. Ticker symbol CNOB, Connect One Bank Corp. So going over fundamentals and technicals, we have here the share price is at $17.07. Market cap of 668 million, if you guys are following me. So I'm looking at the top. Volume at about 580K. That's pretty active for a bank. Before I actually clicked on the list, I do want to mention one thing. I don't know if this is a mistake or anything, but on the NASDAQ, I've seen a few banks that are listed on the NASDAQ. So what that is telling me is there might be some kind of transition or some kind of trade-off that is happening that I don't know about, that people don't know about. Some kind of news impact that happened. I'm unaware of what's going on, but it is so weird to see. Usually in the NASDAQ, they're tech companies, but to have banks in the NASDAQ, that's like unheard of. And I'm not talking about like, just a few, like 2 or 3. I'm talking about like a handful of stocks that are in the NASDAQ where they shouldn't be. So there's something very weird going on in the NASDAQ. I don't know why. I think I'll look into it. I just don't know why. But this is just very, very weird. And then obviously stocks in the NASDAQ, they're going to take apart. Well, yeah, they're going to take, that load of the uptrend on the NASDAQ because they're in the tech sector. So honestly, it makes no sense whatsoever. I know markets are not supposed to make sense, but in all reality, the reason some of the time it don't make sense is because it's lagging. The other reason is because manipulation and people are favored over one side versus another, and that can change day to day, week to week, month to month, and depending on the overall sentiment, people just kind of jump right in, jump ship, and sometimes people jump ship aboard the cruise line and party on the Wall Street boat and see what happens before it sinks, because it looks like Wall Street is on the same cruise ship. Everybody's piling into the NASDAQ. Pretty much that's what's going on. I'm not surprised. That was the 2020 playbook. So they're going to get into this frenzy till the end of the year. God knows when. Hopefully it'll end by the end of the year. Who knows? It might even continue to next year with this AI crap, to be honest. Just because they released the chat GTP. But anyhow, it's just been crazy. The NASDAQ has just been crazy. I don't see no reason why it moves so much, but yeah, it's just insane the way how fast and furious things have been moving on the NASDAQ. So yeah, this ticker is CONB, and it's part of the NASDAQ. I just don't get it, to be honest. So moving on to this other half of the first page. So we have here 52-week high and low. I have 28, a low of around 13. So you can look at that as a difference of 16. That's not a bad differential comparing the two. So if we look at the rest of the numbers we have here, dividend is at 68 cents a share, a return dividend for the year. So you divide that by 4, so 4 quarters. I can't even do the math, but we'll look at the history. Dividend yield is close to 4%. PE ratio is at close to 6, very undervalued. That's the only thing that it has going for it. 5-year trend, if you look at that, lowest of that 5-year trend was about $19, and it's only $2 away from its 200 exponential moving average. So it still has some room to go before it even reaches a solid uptrend, and it needs to hold past that. So the technicals still look pretty bad, and even then you have these small gains here and nothing really big. You don't really have big moves or surges. Just a lot of downtrends. You see this big line going down, and you see it's another big line going down. So for the past 5 years, those 2 legs down mean a lot. That's going to be a huge comeback for it to jump up that high, since, again, banks are not favored this year, and everybody's piling into the tech. So I don't know what else is really looking either flat or really on an uptrend or downtrend. But again, tech, especially the AI crap, it's looking pretty good for an uptrend. And then obviously you have some pockets of downtrend as well, such as the commercial real estate, since the banking sector did bad a few months ago anyway. So moving on to the analysis part, we're going to see the quant rating. Quant rating is, like I said, value, because the cheap price, but to each their own. I don't really like bank stocks. There's other related stocks that are better, and there are other banks that are better. So I just don't like this stock just because of that. Fundamentals are okay so far, and the technicals are bad, but we're still going to deep dive into the financials and still look at some more fundamentals. So we have here downgraded the last 3 estimates for the earnings. So Q4 they missed, Q1 they missed, even Q3 they missed, and Q2 will be at about July 26th through July 27th. They're estimating 54 cents a share, and the one before that was actually a higher estimate. So I don't know, 70 cents. I'm just guesstimating. So around 70 cents. And they did miss that estimate. Moving on to the debt loads here. So 87%, slightly lower than their typical competitors. Margins are pretty high. Wow. That's insanely high to see even past 10%, even in general. That's pretty high consistently. We have in 2018, 37%. In 2019, 37%. In 2020, 28%. In 2021, 46%, close to 47%. Then we have in 2022, close to 40% net margins. So I'm going to read a little bit about this company. Since their margins seem to hold pretty good, they're doing something right. I would assume they cash flow positive, 1.37 billion. Let's see. So they have negative cash flow, but for some reason, their business model seems okay. Based on their market cap, I'm gonna say no. I think this is why they're starting to do a little bit better. If we can see here right away, I already saw South Florida by its West Palm Beach office. So obviously, they're saving more money by, I guess, moving to South Florida. And for some reason, they have saved money. And even though they saved money, they're using that as their net income or reporting that as a cash flow or some kind of holding account where it shows that their net margins are greater. So that's all it is, pretty much. I've never heard of this bank, to be honest. I don't live in South Florida. I go every few years. I mean, it's a few hours away. But yeah, I'm sure a lot of people from up north would love to start going down south just because on the cost structure and the savings. So other than that, the bank is still in bad shape. It looks like they're trying to improve because their margins are really wide. But again, the negative cash flow and their market cap kills them. Obviously, the debt load is another major factor. So I'm going to say no to this stock. Wish them the best, but whatever happens, happens. And we're going to move on to the next one. Next one is PFBI. Let me see something real quick. So this stock actually got delisted. We can see the last time they... Where is the... So this is 2021, January, and then we're looking towards... So yeah, in 2021 is when they got delisted. That was a time when 2021 was actually doing really good. So this stock got delisted. Don't even add it. I don't think you could even add it to the watch list. Again, all these stocks were added like about 2 years ago. So for them to get delisted, that's a really big issue. So it only goes to show there might be further pain in the future when it comes to the banking sector. So I don't want to go over this list all over again. It's kind of, I'll tell you this, it is kind of hard to keep track of stocks that are being delisted because that's another ball game all in itself. That's something that nobody pays attention to, which gives me an advantage, to be honest, because I can see more clearly how things are working and what's going on, and I have more insight as to who's doing what and what's going to happen more or less with certain sectors. So this was in 2021. If this was in 2022, I would have said maybe banks would have tried to seen this beforehand and try to do acquisitions before this would happen, but I guess not. So I haven't seen a lot of delistings in 2022 in general, further along banks. So now in 2023, um, it's a whole new ball game with the banks. Next stock up that I have, WTFC. The name of this bank is Wintrust Financial Corp. It is a community-owned bank, obviously a regional bank. It doesn't say where. It says that they do specialty. Let's see, what is their specialty? So it looks like a crappy bank, to be honest. Just reading about it, local government units, institutional clients. Specialty finance segment offers financing of insurance premiums for businesses and individuals, accounts receivables and whatnot. This looks like your basic bank. Nothing crazy. They're $4 billion bank. I think it's a flawed system that this company is using. I don't think that's a long time neither. If they started in 1992, honestly, I think this company is just lucky, very very lucky. I'd love to see where their location is to see more or less what their portfolio and diversity, what it looks like. I'd love to see it if they would mention anything on their location or anything like that. So $70 for a bank stock, I don't think so. Put your money elsewhere. I think that's way too expensive, first of all. PE ratio is at 8. So again, volume 619, pretty active stock. So I'm surprised with that. 52-week high and low. High of 98, rounded off. A low of 57. Definitely a big differential. So we have, so dividend of 1.6. So 40 cents each quarter. Dividend yield is at 2.3. This stock is such a ripoff just by looking at it. Again, $70. It's a bank stock. Yes, they're a respected market cap at $4 billion, but that just doesn't give the fact that it's 5-year chart. It looks pretty flat. It still has work to do over its 200 EMA, which is about $76. And even then, that's still a waste of money, really. And again, you see these long legs going down more than you see these long legs going up. That only proves and goes to show that out of the past 5 years, we have two, not one, but two long legs going down. It's very, very disliked. So this confirms it. With this one would have been a signal, but a second time here, that only confirms that it's definitely a downtrend. And it's just better to stay away from it, even though Wall Street wants to recommend, over a 90% strong buy. Again, Wall Street, there's so many liars on Wall Street. They always want you to buy because it makes them look good. They get paid. They get commissions. They take spare change, basically, from active users and people that are investing. So, they don't even listen to all these analysts all the time because most of them are trash anyway. Moving on to the quant ratings. So we have quant ratings, highest one. Well, that's pretty even. We have growth and value. I don't see where the growth is coming in, to be honest. Maybe the growth is in the earnings. You see here from Q2, not that they're beating, I'm not looking at beats and misses. That's not what I'm looking at. I'm looking at the arrows, pretty much these lines. If they're going up or are they going down, and by how much? Is it like a small uptrend, or is it like a big uptrend like that? You have different angles and movements. So we have here, these are big margins considering a bank that is only 4 billion. So we're talking about, I don't even know percentage wise. I'm sure analysts like to go percentage wise, but I like to look at the total cost and the actual numbers. I don't like any kind of confusion. So they missed on this one, they beat on this one. Q4 they missed. I don't know if that's considered a lot or a little bit, but anyway, they beat on the next one, and now they're starting to lower their guidance slowly, which would make sense because of the banking fiasco. So they're starting to lower earnings. It's about the same, almost the same as last time. So we're looking at about a $2.40 earnings. So we have here $2.41 to be exact. Next earnings call will be in July 18th through the 24th. I don't care about this stock, but I'm just letting you guys know. It's trying to give me annual estimates. I'm not getting anything. It probably froze or something. I apologize for that. We're going to open this thing back up and continue. So let's get right back into it. So we were here. Lags for some reason. Maybe my connection. So I apologize. Looking at the debt, 90%. Awful. Net margins look okay, actually. Margins look okay. Earnings have been doing better year to year. 2020, that was expected. 2022, they did fairly well, to be honest. And net income, net revenue, operating income is not giving me any info, but I'm not too crazy about seeing operating income anyway. So total revenue has gone up. Net income, let's look at that again. So it's gone up year to year. Balance sheet, again, 90%. Slight increase in debt, but I'm not too crazy about that. Let's see their cash flow. So 2.2 plus 3.48. So you could say 3.5. They're breaking even pretty much. They're pretty much breaking even on their cash flow. So it doesn't look too good for this stock. And again, I'm gonna say no to this stock. It's too expensive. There are better stocks out there. You can look at the dividends. Yes, they've been paying dividends, rising dividends as well. But again, it's just not worth it. There are other stocks that are better than this. And again, it doesn't show what location this bank is at. So we're just gonna say no to this stock and call this a day. So there you have it. The 3 stocks. Thank you guys for watching. Sorry I kept it longer than usual. There was just a few things that I had to say. So again, I'll see you guys real soon. Take care and enjoy your day. I'll see you guys in a few hours.